Yo, 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 happy Monday morning. Harvard Yard, let's go. Bum, bum, bum. Hey, yeah, all right. I can't see your face. I can't see your face. All right. Well, it's a weird time of day. What can I say? So, how are you doing? Happy Monday. Is that better? A little better? Happy Monday to you. Comment allez-vous? Do some trading. Hope you had a nice weekend. I hope you were up late reading textbooks and case studies. Oh wait, that was me. So, anyways, happy day. Other piece of good news: I've been about a day and a half ahead of the class, which is great. So I'm already done Tuesday's work. So I'm almost there. Almost there. Go home on Thursday. So, anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. So thank you very much for being a client to Traders Way. We appreciate you. I appreciate you. You are my sweet baby, and I wake up early for you so I can do good work with you. Today we're going to cover technical analysis, fundamental analysis, and whatever else we can do in this short piece of time on Earth together. So please ask questions. I don't think I'll answer, I don't go over every currency pair. I just don't have the time, but we'll pick out some major ones and stuff. What did you think about non-farm payrolls? All of a sudden, people are not so sure if the Fed's going to raise interest rates. Well, isn't that the funny thing? This is almost a lesson in of itself. You're the expert. Remember, between you and the clients, you're the one that is being paid to be an expert. So think of this market that one day is absolutely certain the Fed's going to raise interest rates for forever, and then they're not going to raise interest rates, and then they're going to cut. No, now they're not going to cut. What a bunch of nonsense. And I don't know who's to blame. Is it the media or something? I don't know, but never get caught in this situation. This is stupid, right? So I don't know what's going to happen, but the summer is never a good time to do anything as a central banker. Because remember, a central banker doesn't change interest rates through the law. They do it through the open market, and you need bankers to also adjust their portfolios. If nobody's in the office, it becomes difficult. So there's no reason to do anything anytime soon. Maybe September, more like October. But even then, who cuts interest rates in a market like this? I don't know. So dollar probably gets strong. Emerging markets will probably lose some value. But don't worry about them because they gained some value when everyone thought the Fed was going to cut interest rates. So, whatever. Welcome to the world, right? Maybe Penn. Maybe. That's not one I typically look at. So I can't promise. Okay. But maybe. So anyways, I want you to put that as a thought. This is summer trading. There's an opportunity for reflection and growth as a human being. You should really think about yourself as a trader and what you do and what you want to do and what you want to become. Think about this market going back and forth of whether the Fed's going to cut or not cut, and they're going to cut, they're not going to cut, they're going to raise, no, they're going to cut. How do you want to represent yourself to your clientele? You should have an opinion, and you should have facts to back it up, and you should be the source of calm and solitude. Morning, Daniel, or good evening. All right. So, anyways, let's just get on with it, huh? So, let me say it one more time. Thank you for being a client to Traders Way, and thank you for being in my life every day. I appreciate you. So, here we go. Let's take a look. Let's start with this scalp, the non-farm payroll scalp. I'm still short. Yay! Woo! Oh, Jeremy says, "Hey, good day. Thanks for the gold call last week. Nice trade. Cool. Sounds like a bottle of wine or cigars or something. Hey, huh? So, anyways, good job if you caught it. All right. So just what happened. So if when you look at this 4-hour chart, you're like, well, there's nothing there. Where's the trade? That's kind of funny, right? So now if you go to a smaller scenario, you take a look, and it's still not much of an entry. So you go to a smaller time frame, and even there you can't even see the entry. So now you got to go to a 1 minute. I don't even know if I got that kind of. Where am I? And the point here is, and this is all very, very silly, very, very silly type of trading. But anyways, oops, you can see at that time, I clicked in. I only gave it one click. Come on, man. Oh, maybe it went the other way. So anyways, there's a little scalp, trading volatility after news. Not really the best way to trade. There you go. Down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 down. You know the drill. Huh? You know the drill. Easy peasy lemon squeezy. But ultimately it doesn't matter. Because think about all the people that actually traded after NFP. Historically, most people lose, some people win, and they make their 20 or 30 pips, and it's all over. And they're all happy with their day, but they may miss something that lasts for weeks. And they got their 30 pip trade. Yay, good job, brah. Good job. Got your 30 pips on a 3,000 pip move. Right? So anyways, we'll see what happens from here. If we start hearing in the media over the next few weeks, let's say over the rest of the summer, a Fed meeting comes out and they're like, well, now's not really time to cut interest rates, but, we're data dependent. We're thinking about it. We're watching Europe. We're watching the negotiations, but now's not the time. Dollar stays strong. Okay. Amazing, right? So one of the things I teach you, and this is sort of, I think this will be the last discussion of strategy, then we'll just continue with tactics, but I teach you to develop a fundamental bias and then trade that bias for years. You're a bull on the US dollar for years. You're a bear on the US dollar for years, not hours, not days, not weeks. And it has to do with your analysis of central bank policy and the differential between central bank policies. Long story short, if you stay consistent in an inconsistent market, you might actually be able to produce consistent results. If you're inconsistent in an inconsistent market, it's insane to think you'll have consistent results. So when the dollar happens to be strong, you'll do very well if you're a bull on the US dollar. And there will be times when you're not as successful. And you can, whether you're a bull or a bear on the US dollar here, doesn't really matter, but you can see there are good, bearish trades, bullish trades, bearish trades, bullish trades on the US dollar here. And if you just did your job, simply did your job, There are great entries. This is a great sell. This is a great buy. Look at this fantastic sell. But if you're making your decisions on the fly with no fundamental analysis, then you're probably almost always late, which means you're always trading in the middle, and you make about this much, and then you lose this, and then and then you lose here, and then you finally sell here, and then you're just late. So you buy here and you make money, you buy here, you lose money, you sell here, you make money, you sell here, you lose money, you buy here and you make money, you buy here, you lose money, right? Like, you see what I mean? And if you're lucky, it's 50-50. If you're unlucky, it's 1 out of 3. So once again, pay attention to these to the fundamentals. Make your trading decisions. Like, this is a great trade. Look at that weekly M3, monthly M3. If you're a bear, oh, dude, seriously? Okay, I gotta wait for my pen. There's my pen. So once again, over the course of the summer, you should reflect on things like that. How do you want to be perceived as a trader? If someone else described you or introduced you to a friend or maybe a potential client, how would they describe you? How would you want to be described? Patient, disciplined, methodical, right? And then you say, well, appreciate the compliment, but it's really just a matter of survival in a zero-sum game that I play every day. And you say, the reason I'm so disciplined and methodical is that if I make things up on the fly in a market that's inherently inconsistent, then mathematically it's like 1,000,000,000 to 1 that I could be, reliably profitable. But if I do the hard work and I do the hard work that's necessary to come up with an opinion, a bias for the medium term, and I apply that strategically, consistently, over and over and over again, there will be times when results might be mediocre, but there will be times when I'm right, and my timing is right, and I do very well. And they're like, oh yeah, well, that totally makes sense. And you're like, I know, right? Oh, for sure. Yeah. So anyways, hey, look, somebody's selling the British pound. Another great lesson, right? Like, who in their right minds would be buying this? So imagine if your amazing fundamental strategy was you're selling the Great British Pound because of Brexit. Right? It's not voodoo magic, makes a lot of sense. There's lots of great trades on that chart. Lots of great trades. This is a swing short. This is a swing short. This is a swing short. Just looking at pivots. And then on a monthly basis, that's a swing short for the whole month. And gorgeous trading. Gorgeous. Anything to add to that? Well, you should know the target here. We're on our way to MM1, and we're not that far away. Okay, so you'd have to incorporate a shorter time frame trade, like a weekly swing. Yeah, weekly swing is short term. Sure. Okay, what do you see here? Out of position. So a bear. Okay. Out of position, not quite right. Almost a role reversal. That's cool, but not quite, not the right pivot, all that kind of stuff. So what do we do here if we're going to try to get an entry? How do we do it in this particular situation? Hi, I'm Barry, and this is my brother Bully. Wouldn't that be great? Okay, how do we get this, guys? How do we get into this trade? Next time. Wrong. How do we sell this? If you're a bear, how do you sell this? I'll say it again. It's out of position. Wrong. Sammy says 15-minute chart would give it. No, we don't want a clear position. We're doing strategy. We're not talking tactics. 4 hour 21. Thank you, Jimbo. Jimbo nailed it. Split it like a hog. Okay. So you might not get it. You might have to wait. Thank you, RC. Thank you, Ted. Okay. So now you got to wait. And maybe you don't get it. But you have to maybe tell yourself that over 1,000 trades, thank you, Jen, over 1,000 trades, learning how to miss a trade because it's not ideal is probably worth a lot more than maybe the pips you leave on the table. Okay? Okay? So for us to have really truly wanted to sell this, it should have come up a little higher. It didn't. Okay? Now you might say, well, it kicked off this pivot point. Okay, fine. Or it did hit the role reversal area. Okay, then you would have sold it already. My fear is someone wants to do something now, and that's why I picked on whoever said the 15-minute chart. Why? The trade's gone. Why would you do something now? Right? Right? God forbid you find a trade 3 hours late. Okay? This should have been set up earlier. So, you could say, well, I'm looking at the monthly pivot acting as resistance, and this will be a roll reversal, and the 21 will catch up. Great. But now, right? Where were you at London Open? That's a London Open trade. Did you guys catch on non-farm payroll? Somebody asked me about like a London breakout trade. Well, like London breakout, I'm like a pre-London front run guy. Why would you wait for a breakout instead of having a trade plan? Right? Like the whole idea is you trap it between some prices and let it break out. I'd rather just have the trade plan and get in before. I don't want to rely, right? I don't want to be late. I don't want to rely on the market to tell me what to do. Oh, I guess we're bearish today. Okay. No. Cool. So anyways, no real reason to be a bull, but let's just pretend you are a bull. First thing you need is support. This would be the proper support. The second thing you need is a reversal pattern, so maybe a double bottom. But the problem is you're setting up a bullish trade when you're below old support. So that's not a good trade. Okay. What's up, Wade? Wade Zuane. All right. fuzzy. Do we really care? I guess we can look at it. So we set this up. You see the one that didn't come through. We set that up. Are those weekly candles? I guess I was here when I did that. Well, the point here being that there was a trade plan based on a double top. The idea is that it should drop, and it did. And therefore, if you were going to continue to play the double top, you would sell in here, which was a 618, which predict a 1382, which got us to the weekly swing off of a weekly M3. And beautiful trade. Never happened. But you notice that the top is still being respected. This is very much a July trade, where it was supposed to fall here, or if it made a higher high, it was supposed to go higher. It hasn't really done either, and I still don't really know what it wants to do, because a bull would buy this area, okay, weekly and monthly support. But what would a bear do? Okay, well, a bear wants to be short between here and here. That's what a bear wants. So, like, like that could happen. So which one's going to happen? Well, this whole zone here is a giant question mark. So I recommend that you at least trade your bias, right? If you don't have a bias, you're going to get caught in there, and you don't know. You don't know, and you're trading when you don't know. Bullish on Swissy, and I'm short Euro Swissy. Okay. No. Well, FX Killer, it's not ideal to do that. If you're not playing, like being long Euro and short Euro at the same time is pretty pointless. I see what you're saying. You're not really playing that, but try not to contradict. Just find something else that corresponds or correlates with Euro. Okay, but if you're short Euro Swissy, you're risk off. Okay, so you might as well be short Euro Yen. Okay, and if you want to short US dollar, you shouldn't do it against Swissy. Okay, because you're already net short Euro. I think I screwed that up. Anyways, yeah, you don't want to contradict yourself. So if you're net short Euro, you're net short Euro. Okay, so think of it as fundamentally. So if you're short Euro Swissy, you are fundamentally macro bearish. So if that was the case, I would want to see something like Euro Swissy short, dollar Swissy short, Euro Yen short. Okay. I don't know if I'd touch USD Yen, but anyways, show me a risk on, risk off portfolio. All right. So anyways, yeah, if you're a bear, the same trade is still in play. Same as before. And that's very much what the kind of trading you'll see in the summer, where the technical analysis just isn't working as well as it should. And that's because nobody but you is trading. Okay? Make sure that's a lesson learned. Write it down. Take a screenshot. Take some notes. Right? How many people have taken me up on the offer of spending summer seriously investing time and resources into their education? Well, I'm at Harvard, you're at your Harvard. Has anybody here jumped in and taken that opportunity? So Harvard's behind me, but like the Harvard Yard is right there. I'm looking at Wigglesworth. That's where Bill Gates stayed as a freshman. Widener Library is right there. I can see it with my own eyes. Your Harvard, that's in your heart. That's in your soul. But like when you should be taking notes like you're in a lecture. Okay, that was really, wow. Okay, summer trading. That's right. So should I expect that in the summer? Should I not expect that in the summer? How maybe should I adapt my trading? If I asked you to write a 5-page paper, right? Is that right, Stephen? Cool. A lot of you guys used coupon code for the video training and for live. Yeah, Jan. That's cool. I liked game theory a lot. It challenges you mentally. It's sort of like doing a Sudoku or something where you're branching it out and trying to figure out the math. And then economics, huh? Which economics? Just economics 101. So the first degree I received was in economics. Oh, macro. Cool. Yeah, love macro. That's actually my degree, macroeconomics. All right. So let's move over to yen yen. Okay. So here's to the person that talked about being Euro Swissy short. And then they're like, but this isn't about Euro. Okay. Let's talk about this. Euro yen generally up. Let's make sure I don't step on my own tongue here. That's good. Okay, we'll go here. Is that 4 hour and daily? Let's put that. Okay. So currently, the yen pairs are more up than down. Currently, so maybe this doesn't last. But again, this goes to the person that said they're long Swissy. Being long Swissy is a risk-off move, and being short Japanese yen is a risk-on. By short Japanese yen, I mean long yen pairs. So to be as concise as possible, if these 4 pairs are moving up, your Swiss franc is going to lose value. Kane, to get my chart templates, you go to HTTP. Sorry, I was typing. Sorry. Yeah, I was typing there. I typed it in the chat. Go to charts.fxbootcamp.com and you can download my chart templates, including the MACD. Yeah. Okay, so yeah, going back to this, if all these pairs are going up, you should probably not be buying Swiss franc. Okay. Now, if you are a bull in the Swiss franc, in particular, you're bearish Euro Swissy, well, we'll see what happens next because you might just be early or something because if you're short Euro Swissy, what you're going to want to see on these pairs is this goes up and then down, 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 down. This goes up, then down, 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 down. This is already, I mean, it should have already fallen. So that's a big cautionary sign if you are buying Swiss franc. And then this one I'm zoomed in too much. Let's just clear that out. Okay. This one, wow, this one's weird. That one's weird. But anyways, to follow the thought, this one would need to do this. And they don't really look like they want to do that, but they might, right? So let me do this again. You probably want something like this. Probably going to get something like this. This one's already too high, which is a warning flag for your strategy. And then this. So that's what you're hoping for. It might happen today. It might happen tomorrow. These are just swing trades on this particular one, which is fine. But if you're developing a Euro Swissy short trade or trade plan, you might say, well, I want to see these yen pairs elevate a little higher and then roll over. And if they roll over, your Euro Swissy is likely to drop at the same time based on the correlation that happens from risk-off scenarios. Yes, FX Killer. So I start doing the swing trading group again the third week of August. And by then, we'll start building positions before the volatility. Okay. So let's take a look at that CAD, man. This, yeah, look at that. Wah, wah, wah. Nice. Some guy, what was it, 6 weeks ago? Maybe it was 2 NFPs ago, he heckled me about, there's no way CAD yen's going to go up. I'm like, look, it's not my opinion. It's just the charts. You don't have to take it so personally. Right? And I drew this. Remember, we were way back? We were way back somewhere, and I'm like, well, right now it's up. So I can't really argue with you. It's not bearish anymore in the moment. So anyways, the regression is still showing a nice, I mean, that's almost a 45-degree slope, huh? Do you remember calculating your slopes, huh? Y equals mx plus b. Mm-hmm. Cool. So that's why I look at this, and it doesn't look like it's going to turn bearish. If it does, I'll tell you how it will do it. And then you could time your Euro Swissy short to that. This has to open out a position, which it does, or has, get to the top of the slope, consider that a projection, into the weekly and monthly targets. Profit taking takes us down. So when that happens, you can buy euro, or you could sell Euro Swiss franc. That'll probably happen at the end of New York today, or maybe pre-London tomorrow. This girl is on fire. This girl is on fire. Try to see to give you the best view. There isn't really one. All right. So what else has happened? You paying attention to Erdogan in Turkey? He fired the central bank president. Well, Brooke, your bond question, I mean, it's a yes or no scenario. Is the economy any worse than before? No. So there's just been sort of a portfolio shifting. The reason there was a small move in the bond market recently had to do with this idea, well, if the Fed cuts interest rates, then that's going to be an economic boom for the stock market. So stocks go up and they take the money out of their bond portfolio. And also this idea that China and the United States are going to have their deal. That's another rah moment because you'll get a boost from removing the tariffs, right? Or trade barriers. But that hasn't really fully happened either. Okay. So nothing's actually changed. So it's just money going back and forth. But I don't think it represents a fundamental change. Okay. When there's a fundamental change, then we will get a trend. Well, Brooke, no. What you're talking about is a full-on risk-off. Sideways is not a full-on risk-off. Okay? So for that to happen, what you're talking about, look at Luca. Wow, what an angry person, Luca. Hey, Luca, I'm in a conference room that is 1,000 miles from my house. No one's ever complained about my microphone before, so I thought this was pretty good. I'm in a quiet conference room. I got up at 5:30 in the morning so I could review my charts and be here for you guys. But sorry, bro. So going back, Brooke, what you're setting up is sort of a giant risk-off portfolio move. And that means, like, imagine a billion-dollar fund manager walked into the office and said, that's it. Kill it. Huh. Yeah, Luca. All right. Well, I'll search for a mic. It's just one other thing to be plugged in. Beijing, what's up, 8? Yeah, so I don't think we're there, right? That's not where we're there. It's just money going from this spot to that spot, this spot to that spot. But I wouldn't get, right? All right. Okay, Luca's right. All right, Luca, I'll look at, when I get home, I'll look at getting a better mic for you. Holy smokes, Luca. First of all, what is my, my actual position. All right, my actual position. Well, if I talk down to you, I really am sorry. All right, but I will look into getting a mic for you. Okay, Mike, Luca? All right. Yeah, so going back to Brooke, I don't think we're in a massive change in market. I think we're jostling for position, adjusting portfolios, but really a lot of people are simply not trading this time of year. So that's why you kind of get on and off, on and off. If I were you, I'd be more worried about, the middle of August and setting up something like that, because you'll need the follow through. And I don't think that's what's happening. Unless the central bank does change its interest rate or indicates that they're definitely not going to. And what you're seeing is people are not sure. Yeah, FOMC meeting, CPI and PPI. Yeah. Yeah, the CPI is, I mean, everything's trending, right? So it would have to be, it'd have to be a pretty significant outside the trend, like, you know what I mean? But yeah, those are going to be movers, but I don't think they're going to be trend changers. Okay. What else should we do? Yeah. Oh yeah. So Erdogan fired his central banker. What else has happened? Greece has a new government. Anything else? Right now, as a bull, I have high hopes for trades like this one. I actually want to see it do stuff like this. Okay, that's what I want. I've learned over the years not to get all upset if it doesn't do that. But that's a nice setup, right? We got the central here. We got the M2, M2 there. It's a beautiful swing entry if you're a bull, in particular after a higher high. Look how high we went, right? So that's what I'd be hoping for. That's what I'd be trading. That's what I'd be swinging. But I've learned in the past that this could just kind of work its way up, work its way down, work its way up. Okay, I'd still take the shot. So one thing I've preached in the past is get decent trades in July, move your stop to break even, and don't even try to make money. Okay? Don't even try to make money. You buy it, move your stop. And if you're not trying to make money, you can get long, move your stop, and then just say, well, I don't expect any pips. My stop's at break even, so I can't lose anything. If I took 20 or 30 or 50 pips profit, it won't really change anything But what if instead you let it run and you're like, what if I can stay long all summer? What if you could stay long till the end of the year? Would that change your trading stats in a positive way? And of course, the answer would be yes. So you're like, you know what? I'll take the shot. And I've done that in summers past. Not every summer works, but some summers it has worked where I'm actually long in July. And what would end up happening is you don't make a lot in July, and then nothing really happens in the first couple of weeks of August, and you're just sitting on it and everything's fine. And then all of a sudden, boom, 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 and September is really good and you're long and strong in October, and all of a sudden you're thinking about getting out in the middle of November, right? And you're still long stuff from July. And it just started with a trade where you're like, look, I don't expect this to work, but I'm not even trying to make money. I don't have any risk, so I'll remove my target. And you throw a Hail Mary, a bunch of them. It's worked before. It doesn't always work. But how do you get your amazing years if you don't take the opportunity? Somebody asked me at NFP, like, how many pips should I make per month if I'm a successful trader? And I'm like, well, it really depends. Some months you make hardly anything, a few hundred pips. In other months you make 10,000 pips. And they're like, 10,000 pips. I'm like, yeah. Yeah. Well, but you got to take the shot if you're going to score, right? So not every year, but think about it. How do you feel about July? Would you even consider on paper saying, look, the worst thing in the world that could happen is you lose a lot of money in July when the market's not likely to do anything. So maybe put this down in your to-do list. When analyzing markets, they use the term alpha and beta. Maybe you should read about that. What does it mean if July has an expected low beta? Okay. So what I'm saying is if July has a low expected beta and you lose a lot of money, it's the worst thing you could possibly do. And the easiest thing to do in July is have a zero return. You get that by going on vacation, for example, right? But you're like, hey, man, with a low expected beta, I didn't expect to make any money. So that was when I took vacation. That's when I took my kids to Disneyland or whatever, right? That's when you go out to the lake and zip around on your boat, right? Go tubing. But because that's a lot better than losing money. Or you can say, I'm going to use a trade strategy that assumes I'm not going to make any money. I will take really conservative trades in the direction of my bias. I will only buy at support. But when I do, I'm going to remove that risk. And I'm going to get paid for the risk I took. Right? Because when vol comes back, you're in it to win it. All right, so that's all. Just put that in the thought process. If you took the shot, what if you didn't have a price target? You had a time-based target. You're in this until American Thanksgiving. Ciao. Okay? Imagine in July you took 10 trades, 5 of them broke even, and the other 5 you stayed long. And 100 days from now, they each have 400 pips. Nice. Okay. That's on 4 trades, 2,000 pips. What if you had 25 trades? Yeah. I mean, seriously, what if you slowly developed over the course of summer 25 trades, move the stop to break even 100 days later. Now you're looking at, 10, 15,000 months. That's how you do it. I think that's it for today. I will see you guys tomorrow morning, roughly the same time. I have an exam at noon. It really depends, FX Killer. There isn't one answer to that, but that sounds reasonable. Okay. So, peace on earth. Let's see. Yeah, that's just the lighting in here is just crazy weird. It's bright outside, it's dark in the room. But anyways, peace on earth. May the pips be with you. So these are behind me. These are the Harvard houses. Wonderful. So thanks for being a client. Thanks for being in my life. If I talk down to you or have crappy microphone, I apologize. But you are important to me, and I bring you all with me all over the world. I've traded with you from Florida. I've traded with you from San Francisco. I've traded with you from New York. Traded with you from Hong Kong, and from Singapore, and through earthquakes and tornadoes, and right. But I bring you with me. So here we are in Cambridge. I bring you with me. It would have been very easy to sleep in. I've been working hard since I've been here, but you keep me focused, and I appreciate that. So again, peace on earth. May the pips be with you. May our profits be above average. And I will see you tomorrow. Cheers.